So it's question 5, the cash budget and business ethics. So one thing about accounting is really moving from just being numbers. So they're trying to understand to see whether you can think outside of the box, and also you can solve like the corporate business challenges and issues out there. That's where business ethics comes in, right? So that we ensure whether businesses are doing the right thing and they're not just profit driven, that they only want to make profit at the expense of people. So that's where the business ethics comes in into accounting. As much as accounting, we deal with numbers. Our aim is to make sure that the business makes a profit or whatever. But at the end of the day, we must see whether this business is ethical, is doing the right thing. It's not just chasing profits at the expense of other people, right? So we'll be dealing with a business called feed shoe wholesalers. So they say you are provided with an incomplete cash budget, which had been prepared for the 3 months ended 28 Feb 2012, meaning that the months are December, Jan, and Feb. So the budget covers those 3 months, December, Jan, and Feb. And then they say the business is owned by John Smith. So John Smith is the owner of the business. 5.1.1, they say calculate the figures indicated by A to E in the cash budget. You see they're talking about these figures over here. 5.1.2, they say the entertainment expense were increased by 15%. Entertainment expense were increased by 15% with effect from 1 Jan 2012. Calculate the entertainment expense for Jan 2012, right? So from the 1st of Jan 2012, the entertainment expense increased by 15%, meaning that whatever amount they pay for Jan will be 15% higher than the amount they were expecting or they paid in December. So they say rent income 5.1.3. So I'm just going to go through the questions, all of them, and just give you my thinking process and whatever. Then we're going to jump into answering these questions. 5.1.3, they say the rent income increased. So rent income increased from 1 Jan 2012. So it's the same story as your entertainment expense, but in this case, it's rent income. It increased from 1 Jan 2012. Here they say you must calculate the percentage increase in rent income for Jan 2012. So you can see from your cash budget that rent income was 9,000 in December. In Jan, it increased to 9,810. So they want the percentage increase between the two. So we're going to get into answering that one. And then they say 5.1.4, all debtors pay after 30 days. So all the debtors, people who buy things on credit, they pay after 30 days. This basically says all the people who take credit this month, they'll pay in the following month because they pay after 30 days. Remember, a month is made out of 30 days. So if they take credit this month and then they pay in 30 days, meaning that they pay the following month, then they say less 5% discount. So when they pay, they get a 5% discount regardless of who it is or whatever. So they get a discount of 5%, meaning that they don't pay the full amount, they pay only 95% because they get a 5% discount. And then they say calculate the expected receipts from debtors for Jan. So we're trying to calculate the expected receipt from debtors, right? People who pay their debts from Jan. So here you already know that they say all debtors pay after 30 days. So if we calculate the amount that we're going to receive in Jan, the expected receipts from debtors in Jan, we need to go and look at sales that were made in December. So that's our thing. If they say all debtors pay after 30 days, we need to go and look at all the sales that were made in December. And after getting the sales that were made in December, we know that the credit sales that were made in December, they're going to be paid in Jan. So that will be our receipt for Jan from debtors, and 95% of the amount is what we're going to receive. Hope that makes sense. And then they say all stock sold during the month is replaced in the same month, right? All stock sold during the month is replaced in the same month. So all stock sold during the month is replaced in the same month. So what that means is all the stock that we sell during this month, we're going to replace it, right? We're going to buy new stock from the supplier to replace it. So the markup on goods purchased is 50% on cost. Calculate the expected payment from purchase of stock in Feb 2012, right? So here, if they're telling us that all the stock that we sell in a particular month gets replaced, meaning that we buy new stock to replace that one, to answer this question, to calculate the expected payments from purchase of stock for Feb, we'll need to go and say how much stock was sold in February, right? In Feb. And then after we know how much stock was sold in Feb, we say, okay, this is the stock we're going to buy. So that would be the expected payments for purchases because we're replacing the stock that was sold. So how much stock was sold in Feb? And that's the stock we're going to replace, right? And then they say 5.1.6 as internal auditor. So as an internal auditor, remember, as an auditor is someone who basically compiles the financial statements. And especially if you're an internal auditor, it means that you're employed by the business. So you just look at the financial statements and then you see if there are any errors, right? So you're not involved in like compiling or drawing up the financial statement. The accountant does that. As an auditor, you just come to check, okay, cool. Is everything okay in terms of your accounting principles, your GAAP principles, your IFRS, right? So that's an auditor. He just comes to check whether there's no errors in the financial statement. So they say as an internal auditor, we discover that the actual entertainment expense for December amounted to 35,000. Further investigation revealed that the owner went on business trip during December, right? The owner went on a business trip during December. His family accompanied him, and part of their expenses were included in the 35,000, meaning that the expenses of the family was also included in the entertainment expenses, right, as a business expense. So they say state 2 points that should be included in the internal auditor's report to John Smith. 2 points included in the internal auditor report to John Smith. Think about it. Is it okay for John Smith to include the expenses that were incurred by his family on a personal level in business expenses? Now, just a tip, think of your GAAP principles, right? There's one principle that talks about personal expenses and whatever in GAAP principles. So that's something you need to touch on when you're discussing this point. Is it okay to include the expenses of the family as a business expense, as an entertainment expense? And then 5.1.7, according to an article in local newspaper, allegations are made that fit shoe wholesalers are polluting the area by dumping their waste in the nearby field. So they say, explain how the owner should react to this article, how the owner should react. If the allegations are true, how should the owner address the problem? This could affect the cash budget in several ways in future. Explain why the owner, John Smith, should be concerned about this. So we're done reading the requires. I was just taking you through the thinking process, and now we're gonna go through answering each of this question. So 5.1.1, right? So let's calculate our A. So our A is the cash at the beginning of the month. So the cash at the beginning of the month, since we have the cash at the end of the month of 95,000, we can easily say cash at the beginning of the month. So at the end of December, we had 95,000, meaning that at the beginning of Jan, we're still gonna have that 95,000, right? So that's how you get the cash at the beginning of the month. Usually the cash at the end of the month from the previous month is the cash at the beginning of the month in this current month. So your A is 95,000. Your B is your cash at the end of the month for Jan, right? And since you had cash at the beginning of the month of 95,000, and in this current month you had a cash shortage, the brackets indicate the shortage, meaning that the minus sign, right? So you had a cash shortage of 45,000, meaning that the cash at the end of Jan will be 50,000. Because you had 95,000 at the beginning, you had a shortage for the month of 45,000, therefore 50,000 is your cash at the end of the month for B. And let's go to C. So C, it says you must calculate the cash surplus or shortage for Feb. How you get a cash surplus or shortage is you say receipts minus your expected payment. So your expected receipts were 475,000, and then you minus your expected payments of 637,123, meaning that you'll have your shortage. So it's a shortage because your expenses or payments are higher than your receipts. So in Feb, you're expecting to make 475,000, but you expected to also have payments up to 637,000. So you see that your payments are higher than your receipts, the money you expect to receive. Therefore, this is a shortage. It has to have a minus sign, right? But if your receipts, meaning that the money that you expect to make is greater than the payments, therefore this symbolizes a surplus because you'll make more money than you'll pay out. So here we have a shortage of 162,000 for February. And then CD is your cash at the beginning of the month of Feb. Remember what I said? The cash at the end of the month of the previous month will be the cash at the beginning of the month. So this B was 50,000. At the end of Jan, we had 50,000 in our budget as cash at the end of the month, meaning that for Feb, which is your D, we'll have cash at the beginning of 50,000. Right? And then you have E, which is cash at the end of the month, which is this E. So at the beginning of the month, you had this cash of 50,000. So it's 50,000. It's this D over here, which was 50,000. That was the cash at the beginning of Feb. And then you also had a shortage of 162. Remember, we calculated it at C. Therefore, you'll have a cash at the end of the month of negative 112,123. Because you only had 50,000 at the beginning of the month, but you expect a shortage of 162,000, meaning that you have 112,000 at the end of the month. Happy with that. So 5.1.2, they say the entertainment expense increased by 15% with effect to 1 Jan 2012. Calculate the entertainment expense for Jan 2012, right? So entertainment expense for December, it was 10,000, but it increased by how much? By 15% in Jan, from the 1st of Jan, meaning that from the 1st of Jan, you're no longer paying 10,000, you're paying 15% more. So there are two ways you can go about doing this. You can say, okay, cool, let me just calculate the 10% first. So I'll say 10,000 times the 15%, sorry, the 15%. So you'd say 10,000 times the 15%, and then that's 1,500. And then you say, okay, cool, they were paying 10,000 for December, meaning that in Jan, they'll pay 10,000 plus this 1,500, and then you get 11,500 for Jan, because it increased by 15%. Or alternatively, how you could calculate it, you can just say, okay, 10,000 It's what they were paying in December, right? You multiply it by, okay, cool. Now they'll be paying 15% more, meaning that they'll be paying 100% times 15. You can say, okay, 115, which is what you want. What you want is always on top, right? You want the increased entertainment expense, and then over 100, right? So you're looking for 115 because they'll be paying 15% more, and this one is only the 100%, right? It's the original December cost, and then you increase it by 15%, you still get. So this is a shortcut method whereby you just say what you want on top over what you already have. You already have 100%, which is the cost that they were paying, the 100%. Now they're going to be paying 15% more, which is what you want, 115 on top. Happy days. And then they say the rent income increased from 1 Jan 2012. Calculate the percentage increase in rent income for Jan 2012. I showed you this. I was like, okay, rent income was 9,000. It increased to 9,810 in Jan. Therefore, we're looking for the percentage increase. So I just say 0.3. So the percentage increase. So to calculate the percentage increase, you always say the new. It can be the new price, new cost, new amount, or whatever, minus the old amount over the old amount times 100. So whenever I say calculate the percentage increase, percentage decrease, or whatever of something of a certain value, you always say, okay, the percentage is equal to the new amount minus old over the old times 100. So the new amount in Jan after the increase was 9,810, right? And the old one in December, it was 9,000 over the old one, and then you multiply that by 100. So meaning that you're going to have 810 over 9,000 times 100. So that's your percentage increase when you say 810 over 9,000 times 100, 9%. So that's your percentage increase. That's your percentage increase. And then we go to 5.1.4. 5.1.4. So for your 5.1.4, they say all debtors pay after 30 days less 5% discount. So I explained this at the beginning, that meaning that they basically saying if they pay after 30%, meaning all debtors pay in the following month after they purchase the good, and then they get a 5% discount, meaning that they don't pay 100% of the amount, they only pay 95%. So I said to answer this question, to get the expected receipts from debtors in Jan, the amount they're going to receive from debtors in Jan, we need to go and say what were the credit sales in December. And after getting the credit sales in December, we say these people are going to pay in Jan. Therefore, we multiply that amount by 95% to account for the discount. So let's go and calculate what were the credit sales for December. Most students will make a mistake that they'll go and take this amount and think it's the credit sales from debtors, this collection from debtors. This is the collection for December, right? It has nothing to do with credit sales for December. But how we can get the credit sales for December, we can say, okay, cool. They told us that cash sales are 80% of total sales. So this amount is 80% of the total sales that were made in December, right? So this amount is 80% of the total sales that were made in December. So 80% of the total sales is cash sales. So we're looking for 20% of total sales, which is credit sales, right? So we're looking for that, 20%. So how we can calculate? We can start by calculating your total sales. Total sales, including cash and credit sales for December, right? So you can say, okay, cool. We have 432,100, which is 80% of the total sales. but what we want is the total sales, which is 100%, right? Which is the 80% of credit sales, 80% of cash sales and 20% of credit sales. But we have this 80% of cash sales. So this is what you have. That's why you have 80 at the bottom, and on top is what you want, which is 100%, which are the total sales. So you'll get how much when you say 432 100 times 100 over 80, you get 540,000. So these are your total sales. Now you can say, okay, to get my credit sales for December, I can just take this 540,000 and multiply it by 20%, and then I'll get 108 100. So these are your credit sales. But you can't go and say, remember I said the credit sales that we made in December, we're going to receive the receipts or the amounts in Jan. So you can't go and put this 108 as your answer for this collection from debtors, or your answer for 501.4 as expected receipts from debtors as 108. Remember, you have to account for the discount. As much as this were the total 100% of the credit sales, but the expected receipts, it's going to be 108,000 times 95%, because we're only going to collect 95% of this credit sales, because customers get a 5% discount. And when you times that by 95%, you get 102,600. So that's your expected receipts from debtors in Jan. Happy days. Everyone happy with that one? Thumbs up. Thank you, Katleho. So we can go to 5.1.5. So here they say all stock sold during the month is replaced in the same month. Remember, I said this means that for us to know what's the expected payments for purchase of stock in Feb, we must go and ask ourselves how much stock did we sell in Feb, right? And after getting how much stock we sold in Feb, we can go and say, okay, cool, perfect. Now we can say that's how much payments we're gonna make for stock, because we need to replace that stock, right? So let's go and say for 5.1.5, we need to go and ask ourselves how much stock did we sell in Feb. So we're like, okay, cool, Feb, we made for Feb, we made so these are the cash sales for Feb. These are the cash sales for Feb. But we remember we need to go and determine what's the total stock we sold during the months. So our starting step will be like, what's the total sales that we sold during the month? So we say, okay, what's the total sales for Feb? The same thing in process. You say, okay, cool. We have 420, which is your cash sales. We're looking for 100% of the sales, and we have 80%. So this one represents the 80% of cash sales. We need to go and calculate what's the total sales. So you say 420, 123 times 100 over 80, which is 525,123. These are your total sales. No. So remember, we're dealing with Feb. I made a mistake over here. Don't make this mistake. They said Feb. Remember, they said calculate the expected payments of purchase of stock for Feb 2012. And I said, we're going to say what's the amount of stock we sold in Feb. And after that, we say, okay, cool. That's the amount of stock we sold in Feb. And that's what we need to replace. Therefore, that will be your expected payments. So here, we're not going to use the 420, but rather we're going to use the 360 because we're dealing with Feb. So we're going to say, okay, cool. We have 360, 123, which is your cash sales, times 100 because we're looking for the total sales, over 80. Therefore, when you say 360, 123 times 100 over 80, you get 450, 123, right? This is your total sales for Feb. This is the total sales for Feb. So now we need to go, what's the expected payment to our suppliers, right, for stock? Remember, this amount over here is the amount that the customers are going to pay, or the customers paid, because it includes this 50% markup. But now we need to go and ask ourselves, what's the amount we pay to our suppliers, right? The amount we pay to our suppliers. So the expected payment for stock will be, okay, cool, we have this 450, 123, but this 450 includes the 50% markup. Therefore, we're only looking for 100% of the cost, which is the cost price. We're not looking for that 150%, which the customers pay. We're looking for 100%. So what you want on top, the 100 over what you already have, which is 150. So this 450 represents this, what you have, which is 150, because the customers pay the 100% cost plus 50% markup. But we're only looking for 100% because that's what we pay to our suppliers. So after you say 450 times 100 over 150, you get 300. So 300 is your expected payment of stock, because this is the amount of stock we sold during the month of Feb. Happy days. Everyone happy with that one? Thank you, Tiamo. Nice to see you here, Tiamo. Yeah, so I'm just going to continue. So we're done with your expected payment for Feb. So this 300,000 is what you're going to see here, right? This amount is what you're gonna see as your purchases of stock on Feb. And the one here of receipts, I mentioned that these are the receipts in Jan. Therefore, you're gonna go here, the collection from debtors in Jan. Gonna go here. Happy days. Let me go. So let's talk about, as an internal auditor, you discover the actual entertainment expense for December 2011 amounted to 35,000. Further investigation revealed. So you can just comment from the first line saying the actual entertainment expense for December amounted to 35,000. You can comment already and say, oh, because the question was like, state 2 points that should be included in the internal auditor's report for John Speed. First thing you can say, oh, we budgeted for 10,000 entertainment expense, but the actual is 35,000, right? So I'm just gonna write it down. It's, so that's your 5.1.6. We budgeted for 10,000. If you can see here, we budgeted for 10,000 in December entertainment expense, but the actual is now 35,000. Therefore, the internal auditor can comment in their report and say, went over budget by 25,000, which can negatively affect cash flow. So you recognize that, okay, cool, the company budgeted for 10,000 entertainment expense in December, but the actual was actually 25,000 higher, because the actual was 35,000, which is a concern, right? That's one point you can include. Then they say further investigation revealed that the owner went on a business trip during December. His family accompanied him, and as part of the 35,000, the personal expenses were included, right? So the internal auditor can say, this is unethical, as including personal expenses as business expenses Lost my train of thought, but yeah. So it's unethical because including personal expenses as business expenses is misleading and not in line with the business entity rule. So remember, the business entity rule is one of the GAP principle, right? It says the affairs of the business must be kept separate from the affairs of the owner. That's the meaning behind business entity rule. So it's basically saying we must separate the affairs of the business and the one of the owner, because those are two separate entities, right? So what John's mean details unethical because, and it's against that GAP principle because he included personal expenses as business expense, which is not in line with the business entity rule, right? Say, okay, that point you can say expenses for family are drawings instead of business expense. So remember that the owner, when it takes money for personal use, we consider those drawings and not actually business expenses. So John's bid was supposed to include that portion of the family as drawings. So you see, these are 3 points you could have mentioned in this. I'm sure you guys are thinking of even more. Remember here, you just need to be creative and write anything you think down, right? And you'll definitely get those marks. 5.1.7. 5.1.7, right? According to an article in the local newspaper, allegations are made that feed shoe wholesalers are polluting the area by dumping their waste in the nearby field, right? So polluting the area, first thing, by reading that line, you know that's unethical. You can't be polluting the environment. That's unethical because you're basically chasing profits at an expense of the public, right? That can have negative effects on the general public. So they say explain how the owner will react to this article. Okay, right. How the owner will react to this article. So there are a number of ways that the owner can react to the article. First one, let me just see if there's anything on any questions on the chat. Any questions on the chat, or you can still hear me? The share screen. Okay, cool. I saw that one. Saw that one. Saw that. Saw that one. Okay, cool. Okay, good. So the business is polluting the environment, which is unethical, right? So explain how the owner will react to this article. So if you as a business owner, once you see such allegations, you should be concerned because this thing can negatively affect your reputation, right? So you would be concerned as the owner. Okay, cool. These people are claiming that we're polluting the environment, and this thing can make us lose public trust, right? Or the trust of the public, because now we're doing something that's unethical and that can harm the environment and also harm the community, right? So first thing you can say, okay, cool, 5.1.7, 7.1, one owner consent, as this can negatively harm their reputation. So that's the first point you can put down as how the owner will react, right? And obviously, as a business owner, you'll want to inquire more, right? So you inquire and investigate whether these allegations are true. So repeat the answer for the first point. So they say, according to an article in the local newspaper, allegations are made that feed shoe wholesalers are polluting the area by dumping their waste in a nearby field. And explain how the owner, so we need to explain how the owner will react to this article. So the first thing, the owner will be concerned, right? Why? Because this will negatively affect their reputation as the business, right? So that's the first point. That's the first point you can put down. The reaction of the owner will be concerned because this can negatively affect their reputation and maybe sales, right? Second point is the owner will need to investigate whether these claims are true or not. When you hear this type of allegations, obviously as the owner, you need to go and investigate whether those claims are true or not. So that's your answer for the first point, right? Hope you're happy with that one. Second point, they say if the allegations are true, how should the owner address the problem, right? So if the allegations are true, how should the owner address the problem? So there are two things, right? So the owner, for point two, owner can come up with another waste disposal system that will be environmentally friendly. So the owner can come up with another waste disposal system that will be environmentally friendly because the other one pollutes the environment. And in addressing these issues, the owner must inform the community of plans to clean up the area and also solve the issue. So the owner must come up with another waste disposal system that will be environmentally friendly. And after, the owner must communicate and inform the community that, okay, cool, we will clean up the environment, and also here's our plans of our plan of the new environmental system that's friendly, right? Or the dumping system, disposal system that's environmentally healthy. So those are 2 points. First, they come up with the system. Second, they inform and communicate with the public or the community, right? So those are the 2 points that you can mention, right? And if there is any employee that's responsible for this dumping or illegal dumping, they should be held accountable. So if there are any employees that are involved, let's say for example, there's a manager who's involved in dumping this waste or whatever, they should be held accountable, right? Because they're not supposed to do those kind of things, because now they causing a bad reputation for the business. Lastly, they say this could affect the cash budget in several ways in future. Explain why the owner John Smith should be the cash budget is firstly It's going to affect the cash budget because developing a new dumping system will be costly, right? Therefore, they will be higher expected payments in cash budget, right? Developing a new dumping system will be quite costly, and also cleaning up will be costly. So developing a new dumping system that's environmentally friendly will be a bit costly, and secondly, cleaning up the environment will also be costly, which will lead to higher expected payments, right? And why should the owner be concerned? Why should the owner be concerned? If you look at Feb, you're already running. Remember, your E was one. Just go. Your E was 1012. It was an overdraft of 1012, right? Meaning that we are running at a negative cash balance of 112. So the owner should be concerned because if now will be incur more payments in future due to cleaning up and coming up with a new dumping system, this will result in more negative cash flow. So that's one point, last point we can put down in why should the owner be concerned. Happy days, happy days. So are there any questions? We're gonna stop there for today. So are there any questions? Are there any questions?